Hey everyone, Jay Soloff from Investors Alley, and this is our options trade of the week. So we are here at Market Chameleon at marketchameleon.com looking at their options block trade screener. So I like to look at block trades, sort them by quantity. It's not only interesting to look at, but you could see what some well-capitalized traders are doing. Potentially people with access to very good research can be indicative of potential movements in some of these stocks, but also again just interesting to see what some of the big dollars are doing. So we can sort it by quantity. We can then refine it. So let's say we want to see calls and stock contingent. So that means trades that are tied to stock. So if you do calls that are stock contingent, for example, those are generally going to be covered calls. And you can see something's being done here in Bank of America. 20,000 share calls sold versus 2 million shares expiring in January, 4 million being taken in. So this could be an interesting trade, potentially juice your yield while you're holding Bank of America stock. You know, there's GE, looks like this one goes out to 2022. Someone's selling calls at the 7 strike with a spot price at 639, and so they may think that GE is just going to hang around this level for the next year and a half or so. But even if not, this is if you're selling at 173, that's a 27% yield on this. So maybe they just feel like this is a good yield to earn while holding the stock. Going back to this Bank of America, though, this is interesting because it gives you some upside, about 10% upside to 25. You're earning 2, which is not quite 10% over the course of up until January of next year. So maybe a little over half a year, 7 months. Meanwhile, if you're holding the stock, you can get the dividend, which is a 3.2% yield for the year. So this is just an interesting way to hold a stock, juice your yield, have a little bit of upside. Something like a bank is probably going to be, the interest rates are already ultra low, so that sort of risk is built in. Could be some potential upside because of maybe growth in mortgages with interest rates so low, but most likely this is a play that Bank of America is probably going to stay somewhat sideways. And this is a way to increase the yield. So looking at it here, you can see that really since the crash, BAC has gone sideways. So that's the expectation, basically. This is saying that there's that expectation. It's going to stay below 25, through January of next year. Getting that $2 means that the effective buy price is down here close to 20. So you're pretty much protected in this range. And then again, let's take a look at that. It was January 25, so slightly out of the money, sold for $2. So that's sort of, again, that's increasing your yield for holding the stock when otherwise you'd only be making about 3%. Yeah, you can see all the action here at this strike. So you could do that, generate $2 plus give yourself upside up to 25. This is the sort of thing you can easily do in your own account. You only need basic permission in order to cover a call. You can do it as long as you can buy 100 shares. So if you have, $2,500 sitting around and you want a way to increase your yield on something that's relatively safe, buying a large bank, you're spending that money here, and then you're getting $200 back for selling this call, and you can earn money up to 25. So interesting trade that you could potentially do in your account if you want to take advantage of this. You think that maybe this sideways movement is going to continue in Bank of America. So this is sort of stuff I like to talk about in my Coffee and Condors biweekly chat. If you want to find out more information about it, it's something I do twice a week on Wednesdays and Fridays. It's kind of like a chat room. Check it out at coffeeandcondors.com.